What is happening, crypto fam? Get ready, because the news cycle is absolutely on fire today, and we've got the absolute can't-miss updates you need to stay ahead of the curve. You feel that energy? That's the sound of the market moving, evolving, and presenting opportunities you won't want to sleep on. We're diving deep into developments that could reshape your understanding and your portfolio. From major players making bold moves to intricate data signals, this is your front row seat to the action. So buckle up, stay locked in, and let's break down what you absolutely must know right now. We've got the inside scoop on a significant listing that's turning heads, a major trend in corporate asset management that's redefining value, critical insights into market movements that could signal your next big play, and a surprising disconnect between tech giants and digital assets. It's all here, it's all now, and you're getting it first. We're starting with a massive story about a major Bitcoin mining company backed by a prominent political family making a huge move onto the Nasdaq. This isn't just any listing. It's a multi-billion-dollar push that could change the game for how digital assets are integrated into public markets. Then, we're shifting gears to explore how corporate titans are increasingly embracing Bitcoin not just as an investment, but as a core part of their financial strategy, treating it like digital gold. We'll break down who's buying, why, and what it means for Bitcoin's long-term value proposition. Following that, we're diving into the on-chain data that's painting a fascinating picture of potential selling pressure even as prices attempt to climb, giving you the critical indicators to watch. And finally, we'll uncover why a massive tech earnings report, one that usually sends ripples through the crypto world, surprisingly failed to move the needle on Bitcoin. What does this disconnect signal for the future? Stick around to find out. Don't miss a second. Make sure you're subscribed and the notification bell is on so you never miss an update. A political powerhouse enters the digital arena. Get ready, because a significant player backed by a well-known political family is making a monumental leap onto the Nasdaq stock exchange. This isn't just another company going public. It's a multi-billion-dollar strategic move by American Bitcoin, a Bitcoin mining firm with deep ties to the Trump family, aiming to list under the ticker ABTC. The deal is structured as a stock-only merger with Griffin Digital Mining, signaling a calculated approach to tap into both traditional and crypto-focused institutional investor bases. This move is designed to provide a more robust financing pathway compared to a direct listing, leveraging the established capital market connections of its parent company, Hut 8. With the Trump brothers and Hut 8 set to control a massive 98% of the shares, the company is positioning itself for significant growth and influence. Furthermore, American Bitcoin is casting its gaze towards Asia, exploring acquisitions and partnerships in Hong Kong and Japan to offer cryptocurrency exposure in markets where direct Nasdaq access is limited. This strategic expansion, coupled with a pivot towards energy infrastructure and data centers, creates a unique hybrid model blending the worlds of traditional finance and digital assets. The success of this Nasdaq debut, however, will hinge on market conditions, operational execution, and the broader sentiment surrounding Bitcoin. It's a high-stakes play that merges political influence with the burgeoning digital economy, and all eyes will be on ABTC as it makes its debut. But what happens when major corporations start treating Bitcoin less like a speculative bet and more like a strategic asset? We'll explore that next. Corporate giants declare Bitcoin their digital gold. Is Bitcoin evolving from a volatile digital asset into a stable, strategic reserve? The answer is increasingly yes, as major corporations are not just investing in Bitcoin, but integrating it into their core treasury operations, a trend that's fundamentally reshaping corporate finance. This isn't about dabbling, it's a profound commitment. Consider MicroStrategy, a true pioneer, which has amassed an astonishing 632,457 BTC, currently valued at a staggering $73.5 billion. They're not alone. Marathon Digital holds over 50,000 BTC, and 21 Capital boasts nearly 38,000 BTC. These figures dwarf many traditional assets and signal a clear belief in Bitcoin's long-term value proposition, often referred to as digital gold. This growing adoption is happening even amidst market fluctuations. When Bitcoin experienced dips, firms like Meta and Bullish saw these as prime opportunities to increase their holdings, viewing the digital currency as a critical hedge against inflation and a reliable store of value, much like gold itself. This institutional embrace challenges Bitcoin's historical reputation for volatility, aligning it more closely with traditional safe haven assets. Despite recent price corrections, where Bitcoin saw significant swings, institutional buying pressure has remained robust, with firms like DDC Enterprises actively increasing their reserves. This confidence suggests a strong underlying belief in Bitcoin's resilience. However, this surge in corporate adoption also brings new complexities. Decentralized autonomous organizations, DAOs, and the broader DeFi space are now navigating the intersection of institutional demands and regulatory frameworks. The need for seamless integration between traditional fiat systems and cryptocurrencies is becoming paramount, especially for Web3 startups facing compliance challenges. Innovations that simplify these processes are crucial for the continued growth and mainstream acceptance of digital assets. The integration of Bitcoin into corporate portfolios is more than just an investment strategy. It represents a seismic shift, potentially ushering in an era where Bitcoin is a foundational element of global financial strategy, challenging the very definition of legitimate finance and signaling a new age of corporate asset management. But as these giants pile in, what are the on-chain signals telling us about the immediate future of Bitcoin's price? We've got the data next. On-chain signals flash warning as Bitcoin eyes new highs. As Bitcoin bulls push for a renewed upward trajectory, they might be running into a wall of selling pressure lurking just above the $113,600 mark. On-chain data is painting a complex picture, showing that while Bitcoin has managed to bounce back to around $112,800 from recent lows, the path ahead is far from clear. This rebound appears to be partly fueled by broader market optimism, including a fresh all-time high in the S&P 500 and strong earnings from tech bellwether Nvidia, a company whose performance often correlates with the broader tech and crypto sentiment. However, digging deeper into the blockchain's ledger reveals potential headwinds. Analytics firm Glassnode points out that many investors who bought Bitcoin within the last 3 months are currently underwater, with their average purchase price sitting around $113,600. This cohort, often referred to as short-term holders, may see any price recovery as an opportunity to break even and exit their positions, creating significant resistance. The current market conditions show a fragile neutrality, with spot demand remaining steady but derivatives markets showing a bearish tilt, indicated by negative cumulative volume delta, CVD, and a low funding rate. If Bitcoin can decisively break above the $112,400 level with substantial volume, it could open the door to testing the $114,000 to $116,000 range. Yet, the underlying data suggests this could be a challenging ascent. On the flip side, if Bitcoin falters, the critical support level to watch is $107,000. This level is significant because it represents the cost basis for investors who have held Bitcoin for around 6 months. A sustained move below this point could trigger widespread fear and accelerate selling pressure, leading to a more substantial downturn. Despite these short-term cautionary signals, the long-term picture remains buoyed by consistent institutional demand. Bitcoin ETFs and corporate treasuries are absorbing an estimated 3,600 BTC daily, significantly outpacing minor issuance and indicating strong underlying accumulation. For instance, Metaplanet recently announced plans to raise nearly $900 million to purchase more Bitcoin, adding to its already substantial holdings. This ongoing demand from institutional players provides a bullish counterpoint to the short-term selling pressure indicated by on-chain metrics, creating a tug-of-war that investors need to monitor closely. Speaking of institutional demand and market signals, we're seeing a fascinating divergence. A major tech earnings report that usually boosts crypto just didn't move the needle. We'll break down why next. Tech giants' record earnings fail to ignite crypto rally. In a development that has market watchers scratching their heads, a powerhouse tech company's stellar earnings report, typically a catalyst for broader market gains, has failed to spark a significant rally in Bitcoin or related digital assets. Nvidia, the semiconductor titan that has become a bellwether for the artificial intelligence boom, recently announced its second quarter results, exceeding analyst expectations with a 56% increase in revenues and maintaining its record valuation. Historically, Nvidia's earnings releases have shown a strong correlation with Bitcoin's price movements, with the cryptocurrency often experiencing a bullish surge in the quarters following these announcements. This pattern has led many in the crypto community to view Nvidia's performance as a leading indicator for the digital asset market. However, this time, the correlation broke down. Despite Nvidia's impressive financial performance and a stock price that initially saw a minor dip before stabilizing, Bitcoin, Ethereum, and even AI-focused tokens remained largely flat, exhibiting only minor volatility. This disconnect is particularly intriguing given the anticipation surrounding the report, which had an implied volatility suggesting a potential $270 billion shift in market capitalization. Analysts had forecast robust earnings, confirming Nvidia's colossal influence. The market's muted reaction has led to several hypotheses. One possibility is that the positive news was already fully priced into the market by investors who anticipated Nvidia's strong performance. Another theory suggests a degree of caution pervading the market due to broader macroeconomic uncertainties, leading investors to hold back despite strong individual company results. Furthermore, there might be a temporary fatigue surrounding the artificial intelligence narrative itself, which has served as a powerful cross-market catalyst connecting the tech and crypto worlds. While the statistical correlation between Nvidia's earnings and Bitcoin's performance remains valid, its absence in this specific instance highlights that tech signals, while influential, do not solely dictate the direction of the crypto market. The market's reaction, or lack thereof, indicates that other factors, such as regulatory news, broader economic data, or shifts in institutional sentiment, might be playing a more dominant role currently. It remains to be seen whether this divergence is a temporary anomaly or the beginning of a new market dynamic where the traditional Nvidia crypto link weakens. So, what's the takeaway from all this? Let's recap the biggest stories of the day and make sure you know what to do next. All right, crypto crew, let's do a lightning round recap. We saw a major political family-backed Bitcoin miner preparing for a massive Nasdaq debut. Corporate giants are doubling down on Bitcoin as digital gold. On-chain data hints at selling pressure despite price bounces, and a huge tech earnings report surprisingly didn't move the crypto market. That's a lot to digest. If you found this breakdown valuable, smash that like button, subscribe to Bitcoin Bulletin for all your essential crypto news, and ring that notification bell so you never miss a beat. Hit us up in the comments with your thoughts on today's news, and make sure to follow us on all social media platforms to stay connected. We'll see you in the next one.